Hey everybody, this is Jim at SP500chart.com. It is Sunday afternoon, about 5:30 p.m. Futures haven't opened yet, so I feel like lately when I do the video before we get a peek at the futures that sometimes it ends up biting me. But the chart is the chart, and just based on principle alone, I'm going to do this based on the chart and not what I see at 6 o'clock or 6:01 when futures markets open. That said, before we get started, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look at this past week. The first thing I want to point out is I think this is a textbook case of showing you what a legitimate break of support looks like. I mean, if this isn't it, I don't know what is. Here's our support line. We also had a resistance line, and we knew that either we take out our resistance and we head up, or we take out our support and we head down. Clearly, from all of this just meandering back and forth within roughly about a 5% range, 4 to 5% range for more than 6 months, within a week, the markets, the S&P in particular, sees an excess of 10% shaved off of its value within, really almost just within days. So 6 months going sideways, support breaks, and it's like somebody just opened the dam and this just came flowing down that breach of support. That is what broken support looks like. And though you might say, but Jim, you were saying this could either go up or this could go down. Yeah, I know. And I would say that every time you see a consolidation pattern, you have to have that mindset. It's either going to go up or it's going to go down. You don't always know which way the imbalance is going to occur that takes things up or takes things down. In this case, we went down. We went down on news, but the degree of the fall was prepared by this consolidation pattern. Even when we look at it on a 30-minute chart, you can see going sideways, 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 break support, zoom. Within 4 days of breaking support, we see a level all the way down to well, what was our lowest level there? Let me move this little guy here. Roughly the high 1860s. Okay, now what happened this past week? Well, first off, we saw a tremendous amount of selling pressure on Monday. We saw a rebound, and then more selling. We saw a rebound and even more selling, at which point on Wednesday, I believe that was Wednesday. Let me zoom in just a little bit more. No, it was actually on Tuesday. We closed at a low that was almost exactly equal to the initial low set within the first 10 minutes of trading here on Monday. So we come down, we come up, down, up, retest that level, bounce off that level again, and that set up what was for Wednesday, Thursday, and Friday a recovery of sorts. One just thing I want to mention. I mentioned that we may be seeing some gap resistance from this gap right here on Monday, and our initial rise to that level on Thursday saw just a little bit of selling pressure. Then we formed this little typhoon flag, and remember, when you see one of those patterns form, you have to be on the lookout and realize it will likely break down, and the likely outcome from that breakdown will be for the levels to return to where they were about when that ascending wedge started to form. So there it is. That's about where it started to form. And then on Thursday, we saw some additional strength where the market recovered to close at almost the highs of the day. Then Friday, we go sideways. Interesting to note, we had a descending channel right here that was already descending at a not a great pace, but it was already clearly descending. It is possible that we could get back inside of this channel defined by these two teal lines. So far on Friday, we did not, but that is possible. The other thing that was interesting to watch was, and I mentioned this on Monday, and I think I mentioned it throughout the week as well, that when you have an already steeply descending channel, which, by the way, this wasn't just a steeply descending channel, this was a descending wedge that was descending at an annualized rate of loss of 99.72%. You can see that right down here. Take a look at that. Pause the video and read all the information that we get about that trend line. I'll make it pop up one more time. There it is. You get the time frame created, when it was updated, etc. So, I really believe that when you already have a descending trend line of support that is clearly defined, and then you fall down through that, that is a very, very common sign that this was long, probably retail traders, but longs who were just bailing out of the market helter-skelter, totally emotionally driven. Because think about it. This thing's already headed down at a loss to where in a year the market is going to be worth 5. The S&P would be trading at 5. Not 500, not 50, 5, if this steep descent were to go on for a year. So what rationale is there to see the bottom drop out of this thing, where we should have been at about 1958, we actually get down to 1868. We see a 90-point drop from an already breakneck descent. I've seen that time and time again. Usually, that tells you wherever that bottom is made, that's at least a short-term bottom. So I think that was a very good call. Then for Monday, Tuesday, and Wednesday, we started to form a consolidation pattern here, sort of in the form of a triangle. That's the thing that got a little tricky, because on Wednesday we broke down underneath our rising support line, but not by a technically significant margin. That point of breakdown was 1893, and we got down, well, I take it back, it was a little bit more than 1%, but it also came back to this descending support line, which you can see it tagged perfectly on the close on Tuesday, and just between you and me, that told me to say, let's just watch this. You'll remember the video I did after the close on Tuesday. I said, we're getting mixed signals here. If this is a breakdown of our consolidation pattern, then we should be seeing something trading around 1824 as a result of the break of this line. But we've got this descending trend line that we closed at. So we need, the word was, we need to watch the open on Wednesday very closely. If we see follow-through selling, then get ready for the mid to low 1820s. Instead, we did get the bounce, and we ended up breaking out over this consolidation pattern on Thursday. This pattern, all by itself, carries a target of about 2018. I mentioned before, we did put on the brakes before we got a good healthy challenge of this descending teal support line. If we get over that, we have two more hurdles. We've got this line right here, which is descending resistance, not what used to be descending support. Remember, descending support, when it breaks down, it's not that big a deal to see things recover above that line. However, descending resistance tends to put up a better fight. So, I think we've got this line of resistance this week, and then of course we've got our resistance line up here at about 2048. That will be the tough one. It's doable. Now, had we not made our minimum target from the Head and Shoulders top, I would not say this is doable. I would say this will be resistance, and it will almost certainly turn the markets back. And I still think there's a good chance that if we rally up to 248, we're going to see the markets encounter selling pressure at that point. But because we have already seen so much panic exiting from the markets this past week and later in the previous week, we've already done more damage than what this pattern indicated. Because remember, our target from this pattern was about 1950, the upper 1950s to about 1960. We exceeded that by more than two times that amount. So if I were to look at this chart and just say, okay, what does this look like? I would say, well, it looks to me like we've broken out of a consolidation pattern. We tried to do a little back test here. Then we picked up buyers here. We didn't come down for a full back test of this line. We actually picked up buyers before that line. And then we ended the week near the highs of the week. So I would think, heaven help me if the futures opened down 30 at 6 o'clock. I'm not following the news, guys. I just do the charts. But if we do, then I'll be the first to admit the chart isn't always right. But not looking at any news, not looking at any futures yet, I'm just saying the chart is making this look as if we're going to be putting some pressure to the upside this week. It looks like a nice move up, a little test back down right here, then another rally, sideways action that may be working out, we'll see, as a bullish flag. So that's kind of what I'm keeping I don't want to say I'm keeping my fingers crossed, but that's just sort of what it looks like. So guys, I think that's it for the S&P. We've got, as I mentioned, a resistance up here around 2135. We'll have resistance again around 2048, and this could put up a little fuss as well. But I'm just thinking this week, I think we've got a very good chance of popping back over 2,000 and putting some pressure on these two lines right here. So guys, I'm going to let that be the video for the week that ended 8/28/2015. Thanks for watching, and thanks to new subscribers, by the way. I do appreciate your support. If you're not a subscriber, it ain't expensive. You could tell I'm from the South, and it just don't cost that much. It's $2.98. No, I'm just messing with you. It's just go to sp500chart.com, check out the rates. It's less than a really cheap cup of coffee per day. And if you can spare that, you get to hear the dulcet tones of my recovered voice after every day's close with this kind of technical analysis. So guys, thanks for watching. Thanks for your support, and take care. We'll do a video tomorrow after tomorrow's close. And if you subscribe tonight or tomorrow, you'll get to see it. So do that. Thanks again. Bye-bye.